Welcome to The Explainer. So, what if I told you there's a real estate market in Latin America with yields that could double what you'd find in a lot of Western countries? And what if I told you it was all backed by a surprisingly stable economy? Well, today we're diving deep into Peru to find out exactly why it's popping up on every smart investor's radar.
Okay, let's just jump right in with the number that probably got your attention in the first place. A gross rental yield of around 6% in Lima. I mean, in a world where every single percentage point matters, a number like that, well, it makes you lean in a little closer and ask, all right, how is that possible? Let's find out. So here's the journey we're going to take. We'll kick things off with the big picture view. Then we'll zoom right into Lima, the country's economic engine. After that, we'll crunch the real numbers on cash flow, explore some fascinating growth happening outside the capital, and then we'll wrap it all up with the investor playbook you absolutely need to make a smart move. So, first things first. Why Peru? Well, because while a lot of emerging markets can feel like a total roller coaster, Peru is different. Think of it more like a high-speed train on a really smooth track. It's all about disciplined growth and an environment that's surprisingly friendly to investors.
And this right here is what I like to call Peru's boringly stable superpower. Just look at this. While some of its neighbors are wrestling with these wild inflation numbers, Peru's central bank is just calmly holding steady, right around its 2% target. Now, for an investor, that's not boring. That's beautiful.
And you know, this kind of stability doesn't just happen by accident. It's built on a foundation of solid GDP growth and a ton of private investment. But here's the kicker. The legal system gives foreign investors what they call national treatment. That means you get the same rights as a local. That's not just a nice gesture. It's incredibly smart policy.
Okay, so that's the 30,000-foot view. Now let's drop down to street level, right into the heart of the action. Lima. This is where all that macroeconomic data turns into real, tangible opportunity.
In Lima, everybody talks about the big three districts. You've got Barranco, which is the cool, artsy, bohemian neighborhood. Then there's San Isidro, which is super upscale, very polished. And of course, there's Miraflores, which is just always popular, always buzzing with energy. These three are really the engine of the city's property market. But what do these prices actually mean for you? Well, how about this? It means you can live in a property with a view of the Pacific Ocean for less than $700 a month. Seriously, just pause and think about that for a second. Where else on earth are you going to find that kind of value? And listen, it's not just about affordable rent. The whole market is on an upward swing. The average home value shot up by 8.3% just in the last year. That's the kind of real momentum that should make any investor sit up and pay attention.
Now, if those prime districts are the headliners, then these neighborhoods are the opening acts that are about to become huge. Places like Surquillo, San Miguel, Jesús María, they're right next door to the prime spots, but their prices are lower and their potential for growth is, well, pretty massive. This is where you might find the next big wave.
All right, let's talk real money, because that 6% gross yield is a fantastic headline, right? But what truly matters is the number that's left over after all the costs are paid. So let's peel back the layers and see what the net profit actually looks like. So here's the reality check. You've got to account for the 5% rental tax. Then there are property management fees, usually 8 to 10%, and of course the building's mantenimiento, which is basically the HOA fee. Once you subtract all that, that shiny 6% gross becomes a 3.5 to 4.5% net yield. And you know what? In today's global market, that is still a fantastic return.
And here's what's keeping those yields so healthy. Just look at the rents. You can get a two-bedroom apartment in a really desirable neighborhood for as little as $750 a month. That incredible affordability is exactly what keeps demand strong and your investment property occupied.
Now, Lima is clearly the powerhouse, but it would be a huge mistake to think the story ends there. You have to look at what's happening across the rest of the country. Peru is investing billions, with a B, into huge infrastructure projects that are literally redrawing the economic map and creating brand new hotspots for investors.
And we're not talking about small upgrades here. The new Metro Line 2 is set to create a whole new string of commuter-friendly neighborhoods. The airport expansion, they're literally building an airport city. And the Chancay megaport, that's a potential game changer for global trade routes. All of this creates jobs, and jobs create massive demand for housing. And all of that energy is spilling out into Peru's other major cities. You've got places like Arequipa, Cusco, Trujillo. Each has its own unique economic driver, whether that's tourism, agribusiness, or a growing middle class.
The key takeaway is that the opportunity here isn't concentrated in just one place.
Okay, the opportunity is clear. The numbers look good, the growth is there. Now for maybe the most important part of our discussion. How do you actually do this? How do you invest intelligently and, crucially, protect your capital? Let's open up the playbook.
If you remember only one thing from today, please let it be this. In Peru, the best deal isn't about the price you pay. It's about the quality of the paperwork. A cheap property with a messy title is a ticking time bomb. Getting the legal side right is everything.
Think of this checklist as your shield. You have to verify the title and any liens with the National Registry, SUNARP. You have to make sure the building's permits are all in order. And since this is a seismic zone, you absolutely have to check the building's quality. Do not skip a single one of these steps. This is how you stay safe.
And finally, there's one really important rule of the game for foreign buyers. It's called the 50-kilometer rule. It's actually super simple. You can buy property pretty much anywhere, just like a local, except within 50 kilometers of any national border. That's it. It's a simple rule, but you absolutely have to know it.
So when you step back and look at the whole picture, the stable growth, the solid yields, the clear rules of the game, it really makes you wonder, doesn't it? Perhaps the biggest risk in a market like Peru isn't the market itself, but simply not knowing the playbook.